Hello, and welcome to myfinanceteacher.org. I want to give you an update, but to be honest, I don't see that much change on the markets. Just as I mentioned a few days ago, I was stopped out of my silver miners positions. I'm still holding, as I mentioned in that video, I think probably around 87% allocation in my personal kind of precious metals related part of my total portfolio. And since then, not much change on the markets. Gold, as you see, is pretty flat. And given the short-term daily cycle is on day 31, I think there is a very small chance that gold pokes again over the upper range of the Bollinger Bands over the next few days. But as I also mentioned in the previous video, there is also a chance gold goes down into the short-term daily cycle decline as well as the intermediate cycle decline later on. So I still have those tight stop losses I've mentioned recently and no changes in my allocations so far. Quick look at the general stock market. S&P might have actually given us an end of a second short-term daily cycle over here on the 29th of July, which would mean that the second short-term daily cycle would have lasted for 46 days. Usually these cycles last for about a couple of months, so 46 days is pretty normal. Of course, there is still an alternative that the second short-term daily cycle is still ongoing on day 49. If it is still ongoing, then it's pretty late already within the short-term daily cycle, and we should see a decline over the next 1 or 2 weeks, somewhere probably to below 50-day moving average. But looking at the futures of S&P 500, futures are actually higher compared to the closing price on the 2nd of July. So that is somewhat of a small indicator that S&P probably doesn't really want to go down, at least over the next short term. Over the intermediate term, though, we're on day 101, so this intermediate cycle is not young at all, although who knows, with the Fed printing trillions of dollars, we might see S&P 500 go back to the recent highs over the next few weeks. If that were to happen, I guess if we break above the recent high, that would be a break above 32.30 or so. That might actually indicate that we are in a new third short-term daily cycle. I might consider a short-term trade with a tight stop loss just in case the general stock market shoot higher from here. But on the other hand, I wouldn't go for a large allocation here, and as I mentioned, I would have tight stop losses because the intermediate cycle has already been going on for more than 3 months. Usually these last for about a half a year, although on the general stock market, unlike with gold cycles, the duration of these intermediate cycles can actually fluctuate quite a lot. So in my personal allocation, still no holdings of the general stock market. Next, a quick look at the crude oil futures. Also, not that much change here either. Crude oil is just inching higher. Bollinger Bands are narrowing. Crude oil might poke through the upper range of the Bollinger Bands over the next few days. And narrow Bollinger Bands usually forecast a violent move in the price. Given that crude oil has recently recovered quite a lot, and given that the strong resistance of 200-day moving average is not that far above the ongoing price level, I think there is a good chance that a violent move in crude oil, if it comes over the next 1 or 2 weeks, might actually be to the downside. That's when I will have a look at the market again and maybe jump into some of the energy allocations in my personal portfolio as well as in this newly created fictitious portfolio, which will track my performance in a little bit more detail. And for more info on the portfolio, you can click this link on the left-hand side in the menu. At the moment, the portfolio is still completely in cash as I'm waiting for a nice entry in all of these different markets, just because I think all the prices are quite likely to cool off over the next few weeks. That's all for now. If you're in the US, I hope you had a nice 4th of July. For everyone, have a nice day and good luck in your trades.